Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The main pattern here since September 2024 had been, I suppose still is after a fashion of sorts. It is the breached and seemingly repaired dark blue September to December 2024 bear channel, currently 1396 to 1777. That is developing into a descending, expanding wedge pattern. However, since February, the bright pink late September 24 to mid-January 25 bearish Andrews picture, which I drew 21 weeks ago, seems to be a better contender in showing the bearish angle of attack. And on this we are today, once again, as we have been now for 3 weeks, just below the upper tie and above, currently at 1655. There is also another large pattern complementing the other bearish patterns, a longer term one, a bright red November 23 to September 24 bearish shift picture, which has even now, after so long, has also been pretty good at showing the bearish angle of attack over the longer time frame. In this one, we are today, as we have been for most of the last few weeks, just above the bright red middle time, currently at 1614, plus also being just below the green declining short medium moving average, and that's currently at 1614, plus also being around about that same sort of area as well. Now the bright red middle time along with this bright pink middle time, which is currently at 1445, had between them helped hold up the market on a number of past occasions, even though they are bearish patterns. Though with this narrowing of market ranges, I suspect that something is going to give, and soon. Going back to the more recent action, we had a really interesting drop 5 Mondays ago, below the pink middle time and the dark blue lower trend line. Though no doubt both of these eroded the bearish incentive, but it was in the end the March 2021 low at 1467 that finally halted the decline and turned prices back up again, up to where we are now. In the process of doing all this, the market created a weekly key reversal up 5 weeks ago, the first weekly key reversal up since at least 2018. And there's something to take notice of. I said 2 weeks ago on this matter, and I quote, "So, is this a long anticipated, by some at least, bullish turn higher from all the bearishness we have seen here since late February?" At the moment, I'd say, like I said last week, so that's a few weeks ago, no. It is a recovery, a small one so far, from a massively overt bearish market. And the weekly key reversal up is an interesting indicator to start watching out for signs that this may be more than just that. But for now, it is a pullback in an otherwise still bearish market. We need much more than what we've seen so far to justify any such change to the bullish in this market's actions. End of quote. I still stand by those words. Ice Europe white sugar in London. After all this time, there still continues to be 3 features of this market to continue to bear in mind on this daily chart. The first of the 3 patterns is the obvious and broken, though now back to being repaired, if only just, purple late September 24 to mid-February 25 descending expanding wedge pattern. And that's currently 479.20 on top to way off the bottom of my daily chart. This pattern had more than the requisite 5+ touches necessary, made back in January this year, and had been severely tested on the top side between late February to mid-April. Enough that I would not necessarily classify as a descending wedge pattern after February, though I'm still keeping an eye on the extension to the upper trend line, as I believe it to be significant. After the break higher seen back between February to March, and on the way back lower, I asked you 16 weeks ago to, and I quote, Also keep an eye on the bright pink late September 2024 to mid-March 2025 recently finessed bearish shift pitch fork. This is a very shallow pattern, and the more the market moves lower through it, the more I'm beginning to like it." End of quote. Well, since then the market started utilizing the bright pink middle tine, first as an attractor, riding prices lower, in a shallow glide until 10 weeks ago, when the market broke free on the downside, but still riding near to the middle tine. 3 to 4 weeks ago we saw attempts higher that failed, getting caught in the well-highlighted overhead congestion between 489 to 490.10, and then the bright green extension to the April to June 2021 head and shoulders neckline, currently at 492.40, and finally by the arching approach lower of the mauve medium moving average, currently 496, and that wasn't tested. The results of all this was an outside week 4 weeks ago, and another 2 weeks ago, and finally an outside month for July. These are not as powerful as the weekly key reversals up seen in New York Sugar, or indeed seen here 7 weeks ago, but these are still there nevertheless. I asked this question 2 weeks ago, and I quote, "What it seems to come down to now is whether the market has the bullish incentive to push up over the pink middle tine, the purple upper trend line, and the bright green neckline extension. Right now, like last week, it doesn't look like it might." End of quote. And that still seems to be the case this week. However, there also seems to be no immediate appetite to push too far lower right now. It all depends on what happens between where we are now and the February 2020 high at 456.60. Because I imagine under that we might well see some fresh sell stop selling emerge. Sugar white premium spread. Some interesting recent gyrations here. 16 weeks ago we had a weekly key reversal down at the same time as making a new recent peak at the time. We continued lower until the combined bull hammer pattern and bullish engulfing pattern 9 weeks ago. Prices had closed fully below the declining gold long moving average, currently par and 3/4, 103/4. And this full-on attempted move below the gold long moving average seems to have prompted the market to turn back up. Plus, it was also a third touch and pullback from the dark blue November 24 to date uptrend, currently at 109 even. The pullback up turned into a fresh move higher, though through the twin pair of overhead 50% Fibonacci lines at 128.75 and 131.25 for the July 19 to September 22 move and the August 21 to September 22 move respectively, and the congestion at 134.25, and into a fairly free area overhead, which it duly exploited 5 weeks ago to new recent highs, but it ran into significant 2013 high at 152.75 and swiftly turned back down, just as it did back in mid-April, making a combined weekly key reversal down and bearish engulfing pattern 5 weeks ago. 4 weeks ago we had a very indecisive long-legged doji cross. 3 weeks ago another indecisive pattern, this time a weekly indecisive spinning top. However, in the formation of this pattern, prices tested lower down through the dark blue uptrend, down through the gold long moving average and down to lows last seen back in February, before retreating higher once more. Now, as I said 3 weeks ago, and I quote, "You could have an argument that the whole action from April and possibly even from November last year could be a possible bull channel, a quite wide one. And I would see your point. However, I am not ready, not just yet, to call it as such, call it so, at least not just yet, though I may change my mind." End of quote. Now, I'm glad I said that, as we are again lower, and I suspect that all three, the dark blue uptrend, the flatlining gold long moving average, and the recent lows, may be coming back to be under test again. This also threatens the late January to early June bullish shift pitch fork. I've not retired this as yet, but this, along with the breached dark blue uptrend, may soon fall into the waste basket if they are not careful. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.